Why don't you go ahead and take it away? Let us know what's going on in the real estate market.
It's good to have you back in the studio. Yeah. All right, here we go. So taking a look at the market stats for the week ending July 27th, 2020. Yep, a little slow. We have 50 days closed on market this past week, 0.91 months supply, about 110% absorption rate. 628 is the average list price, 628,000, of course. Average sale price is 396,000, and our list price to sale price retention is at 98.57. Taking a look at inventory across the board, we're sitting at 8,588 properties. That's up just a little bit. Yes, you heard me right. It went in the right direction. Pending is sitting at 6,438, and closed units for the month, look at that, 7,004. Looking at new listings, we have 1,925 new listings taken this past week. That's up 4%. Part of the reason why the inventory is under control a little bit. Days on market is sitting at 140, and days closed went down to 50. Looking at our price ranges, we're sitting at 65. This
Just
is really,
so everybody knows,
this is delayed.
Due to some construction in front of the corporate building, we've had to relocate our studio for the time being. So we're all in this together.
Yeah. So we're sitting at prices between 0 and 499,000, representing 65 is continuing to deteriorate. 62 days on market for that particular price range, from 500,000 up through $1 million is sitting at 95 days on market, representing 22% of the inventory. And of course, our $1 million inventory sitting at 184 days on market, representing approximately 12%. So
I just want to know what percentage of those $1 million plus homes really shouldn't be listed at $1 million. I feel like lately, when I'm out, people have just in the last couple of weeks just thrown an extra $100,000 on what they think their home is worth.
Well, and that's one of the reasons why we track this, and specifically taking a look at our slide deck is looking at our comparison week over week, and again week over last year, same period. We took 1,700 listings last year, same week. We took 1,925. So this is a really important point. Last year, same week, we took 1,700 listings, new listings. This past week, we took 1,925. That's up, 13% over last year. Of course, if I hadn't put those last year, same period, we'd be sitting here going, oh, it's up 4%, 1,854 to 1,925. But it's important to compare year over year. So we actually added more properties to the inventory this past week than we did last year. Taking a look at active inventory, again, that brought us up to 8,588. Obviously, looking at last year, it was 14,000, quite a different number. But
the
good old days. But looking at our single family detached represented 6,574 homes. So that's where we had about a 1.2% increase in our inventory. And then new home sales are continuing to decline. And again, they're down to 1,183. So we're starting to go in the right direction as far as some new listings this past week were taken. However, look at this. We've also pretty stabilized right in that 6,400 price range, 6,400 properties in escrow range, the pendings. And of course, we were at 5,562 last year. So we're, again, 15% stronger than we were last year, same week. So that is extremely important to understand. And again, this is why I put that in there, and this is what we're going to be tracking. So pending tells us what's happening right now in the marketplace. Obviously, inventory is important, but closed is telling us what pretty much happened in the last 30 to 45 days. Because as you know, you put the property on the market, you put it into escrow, then you go through your due diligence section. Escrow lasts 30 days, 45 days. And again, this is a reflection of that. So we're currently month to date, we're at 7,004 closed properties. Last year, we were at 6,164 closed properties for the same week. And then, of course, that's up 13%. So that's a really strong number because, it's saying that we were basically 20 to 30% ahead in January and February. Then COVID hit. And of course, we started seeing people unplug from real estate. Sellers didn't want to list their properties. Buyers didn't want to go in other people's homes. We totally get that. We transitioned, we pivoted. We're now at the end of this period, we're now crushing it. These are big, really huge numbers. So month supply is still being affected. 1 month supply. This is a tough time. Last year we were at 1.72, almost 2 months supply. And that's really where we need to be, is above 2. Sitting at our average list prices, 628 is what we took. Same as last week. Last year we were about 554. But average sale price. So I'm hearing this in the marketplace, Mike. You said that a little while ago. You said, yeah, prices are going crazy. People are just started in the last couple of weeks to add more money to their properties. So this is an actual reflection as of this morning, and we're sitting at 396 average sales closed price. We were at 412 last week, so we thought that might have been an anomaly anyway. Last year, we were at 338 during this same time period. But if you really want to see the number, slide your eyes a little further right, look at last year, last month, we were at 355,000. So again, we've moved from basically 355, 360,000, up to about 396. So it's about a 10% increase year over year. That's a little strong, but I'd imagine by the end of the year, we're probably going to see it be more like 8%. And if that's the case, then we're in a very, very, well-balanced market. The prices aren't being pushed up ridiculously high. So the last thing down here is the list price to sale price retention. This is really the pulse. So when you take the number of properties that are pending, so that's actually what's happening in the marketplace. You've got your closed inventory reflecting on how, what's, the market and what's been actually closing year over year and week over week. And then you look at the list price to sale price retention, which basically is telling us that the seller, at the time the offer is accepted, what was the difference between the list price and the price that was on the contract that the seller accepted? In this particular case, 97.8% is the target number. We are sitting, and if you're above that number, which we have been for quite some time, 98, 98 and a quarter, 98.57, what it basically is saying is the sellers just aren't giving up as much off the price. But here's the other thing to take into consideration. They're still giving up 1.5% off the price. So it's not like this number is at 100%. Mike, we talked about this last week, which is if the prices are inflated incorrectly, meaning the inflation inflammatory, they're trying to take advantage of the limited supply, or just the greater demand, either way you want to look at it, that number would be 100%. Or it would be above 100. It would be saying that the sellers have come to the realization they're not discounting jack. And so as a result, you're going to continue to pay more, and then we're going to go into that bidding war. So we're not really seeing that. So although the industry is seeing the pressure, it's feeling some of it, which is the multiple offers and, getting your offer right the first time. We're really not in a bad situation. So quickly, I put together that's a nice slide, right? We'll see exactly what's happening here. Okay, I put together a special little COVID report for us that just takes a quick look at week over or year over year, so that we can see exactly where we are, 2019 to 2020. So this is MLS numbers, armless numbers. So armless is down 2,460. If you slide your eyes to the right, you'll see the red number, minus 2,468. This year, we're at 46,681 closings. Last year, we were at 49,149, same period, first half of the year. So we're at 95%, 94.98% of where we were last year. Being 5% off after being in a 4-month havoc, is really not all that bad. 2,468 properties. So you can see how in the chart, you can see how I've identified between the two and the minus 5.02. So in 2019, we were just a few units ahead. So that's a good thing. So closings aren't that far off. So let's take a look at inventory. Inventory right now, we're sitting at about 68% of where we were last year. Normally, we're sitting at about 18,000 last year, 18.2. And again, remember, when I'm talking 18.2, I'm not talking about adding in pending and things like that. I'm just talking about true, what's still available that I can get my client interested in. And if they put an offer in on it, close it. So we're about 68% of that number. And of course, we always talk about, the price ranges and how to use them. But look at this. We're sitting at 65.81. We're normally at 72% in this price range. So what's been damaged, or what's really happening and is being consumed more than any other segment, is really the under $500,000 price range. And of course, that's where 70%, 80% of everybody is anyway. So we talked about, those numbers. So let's talk about sale prices. Are they really jumping up and going crazy? Well, we just talked about it a couple of minutes ago, but here's the annual to date numbers. 2019, the average price was $343,000. 2020, the number's $374,000. So there's been a price increase. I overestimated during the initial part of the presentation, but the actual is 9.16% price increase. That, again, is not a bad number. That's basically the difference between the red line that you see at the top and the gray line, which is, of course, the 2019. So pricing, inventory, everything is basically going in the right direction. Now let's take into consideration that Matt Baker and the Bookspan Baker team provide us with statistics. So I went way back and I found a 2019 slide for July 15th, same week, and the 22nd slide that we did last week. And look at the difference in the interest rates. So what does that really mean? Well, on a $103,000 sale price, you put 3% down, which is $3,000. You got a base loan amount of $100,000 for a 30-year mortgage in 2019 at 4.125. That P&I only was $485 a month. In 2020, that same house can be bought for only $442 a month right now. So that's a $43 savings, or a difference in the purchase price of about $8,800. So you can buy $8,800 more home, or you can save $8,800 by paying $43 a month less. But the point that I'm just trying to make, Mike, is this is not a doom and gloom scenario. This is not a doom and gloom time of year. This is a phenomenal opportunity. If people aren't plugging in and buying homes right now, I don't know. I don't understand why they're not. We've got to listen. Of course, they could be out of work, but again, they could be Mountainside Fitness. It's struggling, trying to not be shut down amidst what's happening. But so this is the market reflection on what's taking place and what's actually going on. And I appreciate you allowing me to pontificate a little bit on the COVID report.
We had a question come in regarding the list price retention.
Yes.
Does list